Today we're diving deep into a topic that's, well, it's not just a buzzword anymore.
Not at all.
It's actively reshaping the financial world. Artificial intelligence in investment and trading.
Yeah.
Our goal here, our mission really, is to give you a shortcut. Get you quickly up to speed on this field because it's evolving so fast.
That's absolutely right. And what's really fascinating, I think, is seeing AI move past that buzzword stage. It's becoming a practical tool, a really practical one.
Yeah.
It's offering significant advantages in the stock market. And that's for everyone, from individual investors just trying to get an edge,
Right.
all the way up to huge institutions managing billions. And it's not just happening on Wall Street either. We're going to look at how it's being used or could be used in emerging markets too, like Nepal, for instance.
Okay, interesting.
So yeah, we'll cover the big picture, the global impact, give some real concrete examples, and then zoom in on what that looks like in a specific local market.
Okay, let's start with that big picture then, that fundamental shift you mentioned, because historically, investing often came down to human analysis, maybe some intuition.
Gut feelings sometimes.
Gut feelings, exactly, let's be honest. But AI adds this whole other layer, doesn't it?
It really does.
It lets investors process just unbelievable amounts of financial data, real-time data, at speeds we just can't comprehend.
Right.
Which means faster, data-driven decisions, finding patterns humans might totally miss.
Precisely. And if you think about the core applications globally, they're incredibly varied. Let's take sentiment analysis.
Okay.
AI tools, and we're talking sophisticated language models here, like the tech behind ChatGPT. They don't just read news articles or financial reports. They analyze the sentiment. They can look at, say, thousands of tweets about Tesla and figure out the overall mood. Is it positive because of a new product or negative? This gives you a sense of market sentiment almost instantly. It can spot shifts, based on that collective feeling way before most analysts even notice.
That's kind of mind-blowing, getting the market's mood in real time.
Yeah.
But what about trying to replicate the strategies of the big names, the legendary investors? Can AI do that?
It absolutely can, and it's fascinating how it works. There are platforms, Validia.com is one example, that use AI algorithms designed to mimic how famous investors think.
Really?
Yeah. So, for instance, if you're looking at Berkshire Hathaway, the AI might apply Warren Buffett's criteria. It'll check earnings consistency, debt levels, return on equity, things like that.
Yeah.
Or take a company like Johnson & Johnson. The AI could analyze it using Peter Lynch's approach, focusing on things like the PEG ratio, that's price earnings to growth and dividend growth. It's like having a little digital version of these masters analyzing stocks for you.
So it's learning from the greats. That brings up a good point. How does this enhance the more traditional methods, like fundamental analysis, looking at company financials, or technical analysis, looking at charts?
That's a crucial connection. For fundamental analysis, machine learning algorithms can chew through financial data, earnings reports, balance sheets, cash flow statements incredibly fast. They can spot potentially undervalued or overvalued stocks almost instantly. Think about analyzing Microsoft's revenue growth or Apple's profit margins compared to competitors. AI does that heavy lifting.
Okay. And technical. Charts and patterns.
Exactly. For technical analysis, AI is brilliant at digging through historical stock price data. It uses things like neural networks.
Which are?
Basically, AI designed to recognize patterns, sort of like a simplified brain. It learns from data.
Got it.
So it can identify key support and resistance levels on a chart, potential entry points, exit points. For a stock like Amazon, it could quickly find moving averages or the RSI, the relative strength index.
Right. Tells you if it's overbought or oversold.
Precisely. And it can even spot complex chart patterns, like a head and shoulders formation for Alphabet, which often signals a price reversal, things a human might miss or take much longer to find.
And the speed factor you mentioned earlier.
Yeah.
That leads us right into high-frequency trading, doesn't it?
Sure does. AI is really the engine behind algorithmic trading and automation. You have AI-driven algorithms executing trades based on very specific predefined rules, and they do it at incredible speeds, often in fractions of a second.
Milliseconds, even.
Sometimes, yeah. This isn't some future idea. It's happening right now on Wall Street, the London Stock Exchange, NASDAQ. Quantitative hedge funds rely heavily on AI for these dynamic, super-fast strategies. It cuts down on human error, too.
It sounds incredibly efficient for executing trades. But what about managing the whole picture, your entire portfolio?
That's another key area, portfolio optimization. AI algorithms can look at your personal situation, your risk tolerance, your financial goals, what the market's doing right now. And based on that, they generate personalized recommendations, maybe suggest a 60-40 split between stocks and bonds, and even recommend specific ETFs or mutual funds that fit your profile.
So it's tailored advice.
Very tailored, and it's not static. The AI can continuously monitor your portfolio and the market, suggesting adjustments or rebalancing as needed. It's like having a dynamic financial advisor.
And risk, fraud. Can AI help there?
Absolutely. Risk management and fraud detection are huge applications. AI systems are really good at spotting anomalies.
Oh, so.
They can analyze trading patterns to identify anything unusual that might suggest market manipulation. They can flag potentially fraudulent activities in real time. This helps protect investors and keeps the market more stable. AI risk models can even alert you if your own portfolio seems too risky based on current conditions.
Wow. Okay, we've covered a lot about what AI can do now, but it's obviously not stopping here. What's next? What does the future look like for AI in global investing?
You're right, it's definitely just the beginning. We'll likely see robo-advisors become much more sophisticated, offering even more personalized and nuanced advice. We'll probably see deeper links with things like blockchain technology, and maybe even enhanced prediction power using quantum computing down the line, though that's still a bit further out.
Quantum computing.
Yeah. But perhaps more immediately, we'll see AI incorporate more alternative data sources.
Like what?
Think satellite images to track, say, retail foot traffic, or geolocation data, even complex ESG metrics, environmental, social, governance factors.
Right. Measuring sustainability and impact.
Exactly. AI can process all that to give insights we've never had before. And crucially, I think AI will become more transparent. It'll get better at explaining why it's making a certain recommendation.
That seems important for trust.
Hugely important. Building that confidence is key.
Okay, so the potential is massive. But let's be real. There have to be downsides, right? Challenges, risks. It can't all be smooth sailing.
No, definitely not. It's not a magic wand. A major challenge is the risk of over-reliance on these AI models.
Meaning?
Well, AI learns from historical data. But markets can be complex, chaotic, unexpected events happen. Think a sudden pandemic or a geopolitical crisis.
Right, black swan events.
Exactly. Historical data might not prepare the AI for that. So relying only on the AI could mean missing crucial context or undervaluing essential human judgment when things get weird.
Okay, that makes sense. What else?
Well, there's bias. AI systems learn from the data they're fed, and if that data has biases in it, the AI can inherit and even amplify them.
Leading to potentially unfair outcomes.
Potentially, yes. Then there's data privacy and security. We're talking about incredibly sensitive financial information. Platforms using AI absolutely must prioritize keeping that data safe and comply with all the regulations.
Totally.
And related to what we said earlier about trust algorithmic transparency, it's really important for users to have some understanding of how the AI is reaching its conclusions. Platforms need to be open about their methods.
So the takeaway is?
The takeaway is that AI is incredibly powerful, but it's a tool. Combining AI insights with good old-fashioned human research, judgment, and common sense is still the smartest approach.
Got it. Okay, let's switch gears a bit. We've talked a lot about the global picture. Now I want to bring it closer to home, or at least to a different kind of market. Let's look at an emerging market, like Nepal's stock exchange, Nepse. How does AI fit in there? Or does it?
That's a great question because the context is quite different. Nepal's stock market, Nepse, is significantly smaller than, say, NASDAQ or the London Stock Exchange.
Right.
And algorithmic trading, especially the fully automated high-frequency kind we discussed, isn't really established or even officially permitted yet due to regulations.
Okay, so no robot traders running wild just yet.
Not yet. But that doesn't mean AI isn't relevant. AI-based analysis tools are definitely starting to appear and be used by investors there.
So what's the potential then, even without full automation?
Oh, the potential is still huge. AI can be incredibly valuable for analyzing PSE trends, trying to predict stock movements, which stocks might rise or fall. If regulations change, automation could obviously be big for retail investors and institutions. Plus, AI could track local factors, political news, economic policy changes in Nepal, and analyze their likely impact on the Nepse. That's really valuable in a market often driven by local events.
And helping investors manage risk, diversify?
Exactly. Helping Nepali investors build better portfolios, balance risk and reward within their own market context.
So are there actually tools doing this now? Local platforms in Nepal using AI?
Yes, there are some emerging players, which is exciting to see. There's a platform called Nepse Trading.
Okay.
They specifically use data analysis and AI to help users understand market trends, spot patterns, and get insights. They offer things like visualizations, charts, heat maps, but also AI-generated buy-sell signals based on their analysis.
Yeah.
Their goal seems to be fighting misinformation with data.
Interesting. Any others?
Yeah. Another one is Nepse. This one's positioned more as an AI trading platform specifically for NFPSE, even if full automation isn't allowed yet.
How does that work?
It provides AI-driven trading signals based on different strategies, price action, momentum, trend following, things like that. It gives suggested entry points, exit points, even stop-loss levels.
So guidance rather than execution.
Precisely. Guidance backed by AI analysis. It also has risk management features and market analysis tools. And we're seeing others pop up too, like Nepse Analytics, NFPSC Meet AI. It shows there's real interest and development happening locally.
That's definitely promising. But I have to assume, given it's an emerging market, there must be unique hurdles for AI adoption in FPSC compared to, say, New York.
Oh, absolutely. The challenges are significant. First, as we mentioned, the lack of specific regulations for algorithmic trading. Without clear rules from the regulator, Saban, fully automated AI trading just can't happen legally.
That's a big one.
It is. Then there's the issue of data limitations and market size. Compared to global exchanges with thousands of stocks and massive daily trading volumes.
Right.
NEPSE has fewer listed companies and much lower trading volume. AI models generally perform better with more data to learn from, so this can be a constraint.
Makes sense. What else?
There are also investor awareness and trust issues. Many investors in Nepal might still be more comfortable with traditional methods, recommendations from brokers, or word of mouth.
So an education piece is needed.
Definitely. Building trust in these new AI tools takes time. And finally, let's not forget the cost. Developing and implementing sophisticated AI systems isn't cheap, and that initial investment could be a barrier.
Okay, so regulatory hurdles, data limits, trust, cost, it's quite a list. But what about the flip side? The opportunities. How can Nepal potentially overcome these and capitalize on AI?
Well, despite the challenges, there are real opportunities. The growth in digital trading is a big one. More and more Nepali investors are using online platforms now.
Right, that makes AI tools easier to access.
Exactly. It creates a natural pathway. There's also potential for new Nepali fintech startups to emerge, creating innovative AI-based investment apps tailored specifically for the local market. And the regulatory side could change. If SEBIN, the Securities Board of Nepal, decides to update policies and allow algorithmic trading, that would open the floodgates.
A potential game changer.
Huge. And finally, there's the possibility of attracting foreign investment. As global investors look for new markets, a tech-enabled NEPSE using AI could become more attractive.
So a really dynamic situation, both globally and in a market like Nepal's. We've gone from Wall Street algorithms to emerging tools on NEPSE. It's clear AI offers this incredible analytical power, this speed.
Unparalleled, really.
But it's also clear, as you said, it's a tool. It complements human insight. It doesn't replace it.
Absolutely. It's about partnership.
Yeah.
Human intelligence guiding and interpreting artificial intelligence. That seems to be the most powerful combination.
So as we wrap up, maybe a final thought for our listeners to chew on.
Sure. I think the really interesting question now is, as AI keeps getting smarter, more capable, and hopefully more transparent, how will you use these tools? It's not just about potentially making better investment decisions, though that's part of it.
Right.
It's also about how you can leverage AI to deepen your own understanding, to see the market in new ways, uncover new possibilities, and ultimately take more control over your financial future. How will you integrate this intelligence into your own strategy?